Hello, hello. Well, today we are coming for a new video, and I start my analysis on the top down, so the monthly time frame. Okay, so this is the business. This is where price left. A run over this long-term high, and the very beautiful thing is that where price was coming before engage the sales, the buy side look at the rest over this short-term high. Sometimes my laptop does this type, but I never don't know why. So and it was rebalancing this fair value gap, BC and center price high to bump the buy side, look at this over the short term high. Okay, and the key thing is that after you done so, what do you have on the weekly time frame? A creation of fair value gap. See, the same candle that bump this long term high, this relative equal highs, these smooth edges, also create a fair value gap, BC. Alhamdulillah. Sorry. Create a fair value gap, BC. Okay. And early on, I was talking the importance of this fair value gap. Why? Because okay, if the market use it, it might need to use it to send price high to make a high, the bump of this high, or first to make a high after being held by constant correction of this week. But there's even more weakness. The market even doesn't get to constant correction of the week, which is beautiful. And as you can see, prior week itself and run below the short term low. I didn't mean that's a shift in market structure. Okay, after the market run below the short term low, that's a shift in market structure. That means now the market gonna offer sell side delivery. The proactive, this price run high, and and now the market is ready to offer sell side delivery. Where you gonna go? Right there. This is a very likelihood to see the market engage these what if equal lows. And mm, what where which one is what is that low? It is this monthly short term low. And what about that gap? Well, very less interesting about this fair value gap, BC, until very likely it turn an inversion gap after being disrespected by a monthly candle. Okay, and the two key price level gonna be what? Constant correction of this short term low and that low, which is the last draw on liquidity. And look the beauty. And now we come back on the weekly time frame. On the weekly time, what do you have? What is your first premium over above the closing price candle? Is this inversion forever gap? Okay, and if the next week the market open inside this gap, then first premium is gonna be what? An immediate rebalance. So from there, now you understand now our directional bias is what? Bearish. So that means the medium term turn to bearish and we're gonna engage a long term draw on liquidity. Okay? And what can potentially disqualify the idea that the market doesn't need to go down and this reversal pattern gonna fail? If you lose this, if you lose this inversion fair value gap, potentially. So when we lose this inversion fair value gap, then we can trust the market can potentially draw high and engage that high. But until then, I favor low prices, and I aim to see this long-term low to be my target. That was it. So, and furthermore, before this inversion being disrespect, I likelihood do not want to see the market on our previous week high. Why? Because it's just a short-term high on the daily time frame. Let me show what I'm talking about. That is that short-term high right there. It's outside this weekly inversion fair value gap. So we do not want to see the market on above previous week high, and from now, just interesting to engage low prices. Until I talk to you next time, be safe and get curious, get better, get smart, get going. That's a beautiful price action, as you can see. Huh? That's incredible. Me, we're gonna have what I'm looking to do, what I'm aiming to do for the next week. Be safe.